Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I Tell.
All right, my name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And friends, you're in the right place. If you've got questions about real estate, about mortgages, about interest rates, man, what is going on out there, right? One more crazy headline after another about how housing is about to crash. Guys, you're in the right place if you want the information, the data, the tips, the tricks, the strategies that you need so you can go out there and make better real estate and mortgage decisions for you and your family. And man, if you're just reading the headlines, you are not able to make good decisions because there are some crazy, crazy headlines out there. But hey, we do this each week right here, same time, same station. Again, my name is Mark Eitel. As always, I am joined by my producer, Jennifer. Hey, Jen, how are you?
Hello, weekend.
Hello, weekend. Jen loves the weekend because we get to do this for you every weekend. But hey, thanks for spending a bit of your time with us. We're super, super excited that you're here. As I mentioned, we cover all things real estate, all things mortgage. We answer all of your questions. That's my favorite part of the show. If you have questions or comments, give us a call or shoot us a text to 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. It rings right here in the studio while we're on the air doing the show, but it also pushes to my office when we're not here. So if you have questions or comments and we're not on the air, you can still give us a call at 855-462-7292. And before I forget, we made everything super easy for you, and we put everything in one place on the internet. So the Facebook page, the Instagram page, the website, the podcast page, everything is in one spot, and you can find that at mrmortgageradio.com. So as we're going through the show, if you want to double back and hear something again, or you want to share the show with somebody, after we get off the air, Jen takes the recorded version of the show and posts it to the podcast page. And you'll find that at the very top link of mrmortgageradio.com. But hey, I enjoy starting each show each week by diving into the data and the headlines and the news around housing and interest rates, Federal Reserve, all the stuff that happened during the week. And again, no disappointment in headlines, one after another, talking about the housing market cooling. And the numbers are way down. And if you just read the headlines, you're convinced that prices are going down. And in some markets they may be, and in some markets they should. But overall, nationally, the averages and statistics are still contrary to that. So I want to dig into that because I read a headline yesterday. Actually, you can just throw a dart at a computer screen and you're going to hit a headline that's poo-pooing housing right now. But the headline that I read, the article that I read, was talking about pending home sales were down, depending on the data set that you read. Realtor.com, CoreLogic, Redfin, all of the economists have slightly different data, which I always find interesting. But the pending sales, which means a home that's for sale, it's currently under contract but not yet closed, that's a pending sale. That number was down 30% year over year, which is a big, big number, guys. But let's keep digging into the data. Pending sales are down 30%. Total listings are down 0.5% from last year. That means less properties in any category of being offered for sale is lower. And then this I found super interesting. New listings coming to the market are down 16%. So what that tells me is the market is slowing, yes, across the board on the buy side, but also new product, new housing inventory coming to the market is also slowing. So it's going to be interesting to see where we go from here, because you hear me say it all the time. Interest rates don't control pricing. The neighbor doesn't control pricing. Your desire to buy a house doesn't control pricing. It's supply and demand. And when more people want to buy than people who want to sell, prices go up. And the contrary is also true. When more people want to sell than want to buy, prices go down, and we need these numbers to shift before we're in a downturn in the market. These are national averages. So again, some markets may be different, but home prices on average nationally are still up year over year, which is mind-blowing to me, because to be in appreciation this late into this active cycle just caught me way off guard. I really believe we're going to fall into a low to mid single digit appreciation cycle and stay there for a while. And the good news is, as long as properties as long as properties appreciating, it still makes sense to buy. But there's more to that story, because even if property doesn't appreciate, it's still better to own it than rent it, because there are tax benefits to owning a piece of property. You get certain write-offs against your income tax that you don't get when you rent. And your landlord doesn't knock on your door and jack your rent up when you own your property. Even if that $300,000 house that you buy in 2022, if you hold it all the way to 2052 and you pay it off and it's still only worth $300,000, well, guess what? That's $300,000 in your pocket just because you bought the property. And we know historically there's no 30-year cycle that you can point at that shows real estate didn't appreciate. So it still makes sense. And guys, supply and demand controls prices. That's the only thing. Whether it's hand sanitizer or toilet tissue in the pandemic, right? We all remember overpaying for that stuff. Or real estate, when more people want to buy than want to sell, prices go up. And when more people want to sell than want to buy, prices go down. And when that's even, prices have a tendency to stay flat. So we've got a long way to go before we get to a depreciating housing market. We've got to get to a flat housing market soon. And we may get there sooner rather than later based on some of the data that we're reading. But still, guys, owning your home makes sense. Even if it doesn't appreciate, heck, you could own it, move on, right? Buy a different property and hold it and allow somebody else to pay that asset off for you by renting it out and creating another income stream. So much wealth is created via equity, and you need to own real estate if you're going to build equity. And if you're paying rent, my God, you know what's happened over the last few years with rent increases, and they're likely to continue as there's no real inventory coming to the market. Builders aren't building houses, they're building apartment buildings moving forward. At least that's the forecast from the builder data that we're reading. So that's another place that there's just not any real sign that inventory is coming to the market anytime soon. And don't count on foreclosures to bring inventory to the market, because we pulled the data set on delinquencies, which is when people start falling behind. That's the precursor to a foreclosure, is a delinquency, and delinquencies are at historic lows. So you've got very few people falling behind on their mortgage. And guys, we did that data set a couple, 3 or 4 shows ago regarding the cycle of a foreclosure and the data set around it and the probability that we're not going to see this big onslaught of foreclosure. So check out Mr. Mortgage Radio and listen to that back episode. But we talked a lot about that. And if you have questions about that, we can dive into it in this week's show. But we're just not seeing builder sentiment indicates that we're not going to see a lot of new builds. We're not going to see a lot of foreclosures anytime soon. And right now, housing is still appreciating. The market seems to be supporting these prices. So not doom and gloom by any means. Super frustrating because it's expensive to buy a house more than ever before in history, but people are still doing it. And we're here to give you the tips and the tricks and the strategies to help you do that. But hey guys, you hear the music? You know what that means? That's my cue. We're going to take a short break. We'll be back in a few. Sit tight. And on the other side of this break, we'll be back with more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned in to your very favorite real estate and mortgage show of the week, the Mr. Mortgage Show. We do this each week right here, same time, same station. As always, I am joined by the magnificent one, Jen, my producer. She is womaning the Anytime Hotline, and you can call or text her your questions right now at 855-462-7292. That's 855-462-7292, and she'll get you on the air. Again, that number is 855-462-7292. And if you miss any of the show and you want to hear it again, we just talked a lot about the economic data and the housing numbers that were released this week. You can find all of that information at mrmortgageradio.com. That's mrmortgageradio.com. And the link on the top will take you to the podcast page. But I know I was talking to Jen during the break, and we do have some questions stacked up. Are you ready?
Are you ready for those questions?
I'm ready. It sounds like you're ready too. So, hey, let's get started. Why don't you throw me the first question? What do we have?
Lloyd just sent this. I'm getting my son ready to buy his first house. It will be in Gainesville, close to the campus. He's 17 years old. What's the minimum age to get a mortgage?
Hey, Lloyd, that's a great question. And yeah, University of Florida, Gainesville is where I'm guessing, right? Or there's a Gainesville in Georgia too. I'm not sure that there's a college campus there. Hey, maybe shoot us a text and let us know which Gainesville you're talking about. I was born and raised down in Florida, so my mind races to Gainesville, Florida. But anyway, brilliant question. And a real estate contract and mortgage application is a legal binding contract which requires someone to be of legal age, which is 18 years old. So you said that he's 17, so you may have to wait until he's 18 to make this work. I'm not sure when he's going to start, what the start date of his semester is versus his birth date. But if you're trying to put this in his name, then you're going to have to wait until he's 18. Here's the thing, though. One thing to consider, and we see this with younger. First of all, I guess let me back up and say congratulations, because this is a brilliant strategy, because Lloyd has thought this through, guys. A lot of us send our kids to school, and then we've got the cost of housing to incur, right? Especially if they're on campus, that's super expensive. But here's a great strategy. Buying a property, a townhouse, a small house, a condo, whatever it is, near campus, and then Lloyd's son can get roommates to help offset the mortgage payment. But the really cool thing is you're setting him up for long-term equity wealth, because a property near a college campus is always going to be in demand, because there's always new students coming in. Even in the short-term rental market, there are parents who visit, kids who visit when they're going on tour of the school. I just think that it's a tremendous opportunity and very, very well thought out, because instead of paying, 2, 4, 6 years of rent to somebody near campus or on campus housing, here you're setting your son up to have a property that you can own together, or he individually later, and rent it out and create an income stream. I just think it's a brilliant strategy. And I encourage everybody who's sending a kid to school to seriously consider this as an option, because there are some amazing loan programs that will help you buy even if you're buying it in your name as an investment property, you can use the landlord loan and not even have to disclose personal income, just assets and credit, because the income that's needed to underwrite the loan is derived from the rental income or potential rental income of the property. So Lloyd, brilliant strategy. He's going to need to be 18. I've got some ideas, if you're open to a conversation, that might help you get there, as far as getting him on the deed and then ultimately on the mortgage. If you guys have to do this before he turns 18, I would encourage you to shoot me an email or give me a call, and I can walk you through that. But great strategy. But to answer the question, 18 years old is the minimum age to enter into a binding real estate contract. So hopefully that helps. I thought that was a great question. And again, man, I'm just really excited for you thinking that far ahead and creating not only offsetting the housing expense, but creating a future revenue stream for you and your son. So brilliant strategy, my man. Hey, Jen, do we have any? Okay, what do we have?
Here's a text from Rochelle. I'm 77 and receive $2,300 per month from my pension and $217 in Social Security income. I can't afford to keep my house and I'm ready to sell. Can I qualify for a new mortgage with just pension income?
Wow, man. So first of all, Rochelle, I am so sorry to hear that you're in this circumstance, because the fixed income senior is just getting beaten up by this economy. The cost of living is outpacing the increases in Social Security. Even the projected increase for next year it's a big one, but all it's going to do is just barely keep you up with the cost of living. So I hate to hear this, because I don't know. I hate to hear this, and it's not uncommon. We're seeing it across the board because nobody anticipated this level of inflation, and nobody anticipated this level of appreciation, which brings along with it increased replacement costs, increased insurance costs. There's just so many components working against somebody trying to live off a fixed income. But let me answer your question. Yes, you can use your pension income, your Social Security income, both combined to qualify for a mortgage without a problem. But here, I've got some ideas for you. Have you considered the reverse mortgage option? Because what that will allow you to do, should you wish to stay in your house, and assuming that you've got some equity in there, enough equity anyway, to do a reverse mortgage, it could allow you access to that capital. You can receive monthly income from the reverse mortgage and never have to make a monthly mortgage payment. You do have to pay your taxes, you do have to maintain insurance, but you don't have to make that monthly mortgage payment. So that's an option. And guys, if you've listened to the show for any period of time, you know how important the reverse mortgage space is to me personally because of my involvement in it with family members years ago. And it's just super important to me that somebody take the time and the care to walk somebody through the process correctly, because it's not right for everybody. But when it is right, it can be life-changing. And then, Rochelle, one other option is you can use a reverse mortgage to purchase a house. You could sell your house, take some of that equity, put down on a new property, put the rest in the bank, and then use a reverse mortgage for purchase, which very few people know even exists, but that will allow you to get into a new place and never make a monthly mortgage payment. If that interests you, let's talk, because I'd love to walk you through it. It's a great, great program, and it might solve your problem. Again, I would need to know a lot more about what's going on, because it's not right for everybody. But when the reverse mortgage is right, it can be life-changing. But guys, you hear the music, you know what that means. We're going to jump into a short break. And on the other side of this break, we'll be back with more of the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And if you've got questions or comments, you can call or text the Anytime hotline, which is 855-462-7292. That's 855-462-7292. Jen, my producer, is womanning the Anytime hotline, and she'll get your questions on the air. One more time, 855-462-7292. And as always, if you missed something on the show and you want to double back and hear it again, or you're looking for some of that data that we referenced, the reports that we were talking about when we opened the show, just check out MrMortgageRadio.com. That's MrMortgageRadio.com. There we've put everything in one easy, concise place. There's links to everything. And we post all of that data to the Facebook page. Just go to MrMortgageRadio.com escalating.com, and you'll find info about me, the team, but more importantly, that data, and then all of the recorded episodes of the previous episodes of the radio show and the podcast are there on that very top link at Mr. Mortgage Radio. But hey, before we jumped into that break, we were talking to Rochelle about some options for the fixed income senior, and I was mentioning the reverse mortgage, and a lot of people don't know that reverse mortgage, in addition to your existing home, putting a reverse mortgage in place to pull some of that equity out so you can have money to live every day and not needing to make a monthly mortgage payment. Wonderful, wonderful program for the fixed income senior. You can also use it to purchase a property. And we've talked about it before. You can sell your property, pull that equity out, take some of it, put it in the bank, take some of it and put it down on a new property, and then put the reverse mortgage in place from the inception, and you never make a monthly mortgage payment. So for a lot of people, that's making sense right now. And if you want more information about that, just go to mrmortgageradio.com and click on the More About Reverse link, and there you'll find more info. But hey, Rochelle, I appreciate that question. And again, I hate to hear that you're in that circumstance, but at least it sounds like there's some strategies that might help, in addition to using that pension and Social Security income to qualify for a new mortgage. But hey, thanks again for that question. And I'm going to throw it over to Jen so we can keep your questions coming. Jen, what do we have?
Timothy text this one. How many people can be on one mortgage? I'm thinking of buying a house with my girlfriend and her sister. Maybe her sister's boyfriend if we could all go in on the loan. Is that possible?
Oh boy, Timothy, that is a brilliant and quite scary question. So let me start by answering your question. Yes, it's possible. The four of you can go on the purchase together, and you can all assuming that there's more than one bedroom, you can all go on the property as your primary residence. And hey, I guess in some areas you might not even need that second bedroom to make it work. But anyway, yes, it'll work. Here's the one thing I just want to make you aware of. So if all four of you buy that property together, and let's say you and your girlfriend are solid, right? Relationship is on its way to happily ever after. And let's say your sister your girlfriend and her sister get along really well. All living under one roof is not going to be a problem. What happens if your sister and her boyfriend don't work out long term? You guys are all married to that house together. So you're on the deed, right? Which is the ownership interest. All of you are on the deed if all of you are on the mortgage. So the mortgage, the note, if you will, is the promise to repay. And that's what's going to hurt your credit if you don't pay, is that mortgage note. So if all four of you are on the mortgage note and all four of you are on the deed, if one of you changes your mind in the future and you want out, you're going to have to refinance the property to pull that person off the mortgage note and the deed. Now, you could technically quit claim deed them off the property ownership, but they're still going to be married to that mortgage. And most of the time, people resist that. They don't want to be married to that debt if they're not on the ownership instrument of the asset. And here's the thing. You guys are all equally responsible, but it's also going to equally impact your credit. So let's say the boyfriend wants to move on and he leaves and he agrees for some reason to stay on the mortgage, but quit claim deed himself off the ownership instrument. And if you guys miss a mortgage payment, guess what? It's going to hurt his credit because you're all still on that mortgage note. So while it's possible and it's doable from the sense of multiple owners on a primary residence, I would just caution you to think all the way through what happens if the four of you don't stay friends and the two couples don't work out. Now, I guess one thing I do want to do is congratulate you on being creative and trying to figure out a way to make this work. But you and your girlfriend might want to consider it on your own first, only because if it's an asset issue, meaning you don't have enough money for the down payment and the closing costs, there are programs for that. We talk about it all the time on the show. We have a new 100% first-time buyer program, and you can borrow 100% of the purchase price. And with that program, the seller can give you 6% of the purchase price towards your closing costs. So you could arguably get into that property for little or no money out of pocket with a loan program like that. Now, if the problem is income, meaning you need all of your incomes combined to pay the debt, then that's a different animal altogether, and you might need multiple people on the loan. But yeah, it's doable for sure. But so is jumping out of an airplane, and it's not for everybody. But I hope that helps. That was a great question. We see a lot of that in multi-generational families, if you will, meaning the parents are moving in with the children, and you buy a big house together because mom and dad just need someone to be there for them and keep an eye on and help out physically or whatever the case may be. We'll see families buy the bigger property with the mother-in-law suite or the extra 2 bedrooms and bath on the other side of the house so that they can set their parents up. We see that a lot where both the parents and the son and daughter-in-law or daughter and son-in-law are applying for the mortgage loan together. We see that quite often, and it works. So to answer your question, it's certainly doable. And if you guys are the exception rather than the rule and the relationship stands a good chance of making it, it may make a lot of sense because you're spreading out the debt and the assets necessary to close over the 4 of you, which I certainly understand the benefit of that. But hey, I want to thank you for that question because that was a good one. We don't get a lot of that. And man, you are courageous. So best of luck. If you need help with it, give us a shout. Guys, if you're hearing my voice, we could be your choice for mortgage lender because we have a network of Mr. Mortgage team members everywhere. So I'm happy to jump in and help if you want to take that to the next step and find out exactly how much you can qualify for and exactly what your down payment and your closing costs would be. But hey, don't forget about that first-time buyer program. It's definitely worth taking a look at. And I don't ever want to discourage anybody from making that leap into ownership. When you're talking about, my girlfriend and her sister and possibly her sister's boyfriend, that's, you want a solid foundation of who's jumping into owning the property with you. But great question. As I mentioned, in the multi-generational space, we see parents with their children purchasing properties oftentimes. And that multi-generational strategy, I think we're going to see a lot of that moving forward, especially at these home prices, because if the parents own a home and the children own a home and you guys both sell and capitalize on that equity, you might together then be able to go out there and buy a big property that's well suited for everybody, and then the parents are going to leave that property to the children. At least we've seen a lot of that in our practice of late, and it works really, really well. So multiple unmarried people on the same transaction is certainly doable, and we do it a lot. So hey, that was a brilliant question. You hear the music, you know what that means. That's my cue. We'll be back in a few. We're going to take a short break, and on the other side of this break, we're going to be back to take more of your questions and more of the show.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, we do this each week right here, same time, same station, and it is our goal to answer all your real estate and mortgage questions and give you that info that you need so you can go out there and make better real estate and mortgage decisions for you and your family. We are blessed to be with you each week. Jen, my producer extraordinaire, is womanning the Anytime Hotline. And if you have questions, you can get those on the air by calling or texting 855-462-7292. That's 462-7292. Or guys, if you want to send us an email, go to that website, mrmortgageradio.com. That's mrmortgageradio.com. Scroll down to the Mr. Mortgage link, click that, and you'll find the Contact Us box. It's super, super easy. Mr. Mortgage Radio now has everything Mr. Mortgage related. It's mrmortgageradio.com. Hey, but before that break, we were talking to possibly the world's most daring man, and it made me think, who's old enough to remember Super Dave Osborne? I think he was on Showtime, right? That poor guy crashed and burned so many times, but he always survived. And that question from Timothy kind of reminded me of that. Brilliant question, brilliant strategy. He was thinking about buying a property with his girlfriend, her sister, and her boyfriend. And yeah, that sounds super exciting. Definitely doable. I wish you luck, and I'm happy to help you if you need some more information regarding that. But hey, I'm going to keep your questions coming here, and let's throw it over to Jen for another question.
Susanna sent this email. I keep reading about home prices cooling off, but they still seem high to me. Am I missing something?
Hey, Susanna, that is a brilliant observation and one of the most common questions I've been getting lately. And no, other than the first segment of this show, you're not missing anything because we talked a lot about that in the first segment of this show. You're right. It's interesting because the headlines talk about this cooling market. And it is, right? We talked about pending sales are down 30%. New listings are down 15 or 16%. Total listings are down 0.5%. So all of the activity is down, but home prices are still 12% year over year higher. So the supply and demand are cooling equally, and there's still more demand than supply. And that's what's keeping the house prices where they are for the time being. And I'll, have a polite debate with anybody about that. Higher interest rates can only slow down the demand. It won't directly impact home prices. Now, if demand slows to the point that we're oversupplied, then it will have that effect. But right now, we're not there. We are still seeing quite a bit of demand, even at these interest rates. And guys, these interest rates are good historically. We had no business being in the 2s and 3s. We really didn't. There were no economic principles other than the Federal Reserve's response to COVID that pushed rates down there. They were artificially low, and they stayed down there because of the COVID response. And I'm not judging. I'm not saying good, bad, indifferent. I'm just saying that was where those low interest rates came from. So as we're now well beyond that portion of this recovery phase, if we can even call this that, there's no reason for rates to be down there. Now, rates have pulled back into the 6s, and we've kind of seen some stabilizing here, and people are buying properties with rates in the 6s, and that's a good interest rate for a mortgage historically. So it's going to be interesting to see where we go from here. But no, Susanna, you are not missing anything. The headlines are all doom and gloom, but right now prices in most areas throughout the country are still buoyed by that supply and demand equation. But hey, Jen, do we have time for another question?
Armando called this one in. Last week you were talking about a 100% loan for first-time buyers. Can you explain how this works? Thanks. Great show.
Hey, thanks for the great show comment. And yeah, I can explain it. So I was mentioning that a moment ago to Timothy that they might want to consider that before everybody piles into the van and buys that house together. But the 100% loan program that we just launched is an FHA loan product. So it's a 96.5% mortgage with a 3.5% grant on top of it to get you to 100%. The seller can contribute up to 6% of the purchase price to help with your closing costs. So you can get into this property with little or no money out of pocket if you can get that full contribution. You're getting pretty close. You can also use gift funds under the FHA guidelines. But what's super cool about that loan product is that 3.5% grant accrues no interest and requires no monthly payments. But here's the big thing. Drum roll. I don't know if you can hear my drum roll. You don't have to repay that 3.5%. So if you sell or refinance, that 3.5% is forgiven. Super, super cool loan program. You need a 620 credit score. And I know somebody out there is jumping up and down and saying, Mark, you said it was an FHA loan program. and FHA goes to 580. Well, they do, and some FHA lenders will go to a 540. But to get the 100% program, you need a 620 credit score. It's a lender overlay. So if you got a credit score of 620 or more, that might be a wonderful loan product for you. And if you need more information about that, just give us a shout. Hey, Jen, I'm going to try to squeeze in another question.
Bonnie called asking, we're selling our home without a real estate agent. We had a contract, but the buyer couldn't get a mortgage approval. Is there something we can do differently next time so we know a buyer is able to close?
Hey, Bonnie, that is a brilliant question, and you would be surprised how often that happens. So the best thing you can do is call us and let us review their approval, and we'll let you know if they're completely AUS approved. And with that, you assuming that the property appraises and passes inspection, if they've gone through the full underwriting approval, the AUS approval, they're good to go. My only other suggestion would be I would encourage, if someone doesn't have that pre-approval, I would discount any pre-qualifications. I wouldn't write a contract with just a pre-qualification, because things like this that you mentioned happened. And there's nothing more frustrating than trying to sell a property yourself, going through an open house experience and showings and the frustration and difficulty of negotiating a price, and come all the way through all of that, write a contract only to find out that they're not qualified for a mortgage. Make sure you're dealing only with pre-approved buyers. And if they don't have a pre-approval, then ta-da, call us. I'll be happy to do an AUS approval and let you know that they are fully approved. But that would be my suggestion. And again, it's not uncommon to hear people going through this when they're trying to sell their property themselves. And if you throw your hands up in the air and you need help and you want a really great agent, I can't endorse really great agents enough. I'm proud to be sponsored by them and to endorse them. These are agents that we've done business with in the past, or that we have vetted. My team has vetted them, so we know they're rock solid agents, and you will be in good hands. Hey, Bonnie, but brilliant question. Thank you for that. I would start by making sure everybody is fully approved, and I would ask to see the AUS approval. And if you need help with that, I can review an approval for you and point out what you need to be looking for. And if the buyer is not approved, I'd welcome the opportunity to jump in and get them approved and lock their rate and make sure that you're set up for a very smooth closing. But hey, guys, you hear the music? You know what that means? We're at the portion of the show where I'm going to ask a favor. If you've enjoyed the show, please share the show. We're always trying to grow the audience. We love doing this for you. Just share the link, MrMortgageRadio.com. That's MrMortgageRadio.com. There you'll find all things related to the show, to my practice, to my team, MrMortgageRadio.com. And if you've got friends, family, or coworkers who are thinking of buying or selling real estate, wondering if it's a good time to buy, what are rates doing, can I consider a refinance, what's that crazy loan program that guy was talking about, please encourage him to call. I'm hoping I can count on you. We're always happy to help. MrMortgageRadio.com is probably the best way to reach us. It's MrMortgageRadio.com. But guys, we have reached the end of another show. My God, where does the time go? We have so much fun with you. We'll be back next week right here, same time, same station. Have a great week and join us next time. So you think interest rates have gotten too high to refi? Well, not so fast. There are several reasons people refinance. Sure, lowering your interest rate is one, but there's debt consolidation, home improvement, unexpected medical expenses, pulling out some equity to go buy an investment property. Heck, I even know of one guy who refinanced his house so he could buy his mistress a condo. But let's jump back to debt consolidation for a minute. I'm working with a client right now. His name is Ben. He's going to refinance his house, pay off a host of credit cards, and 2 truck payments. And yes, his mortgage interest rate is going to go up, but his monthly expenses are going to go down significantly. And that monthly savings is going to get he and his family back on track. Guys, if you've got questions, check us out at MrMortgageRadio.com. That's MrMortgageRadio.com. My name is Mark Eitel, NMLS 1929005. I host the Mr. Mortgage Show, and we are always here and happy to help. Check us out at MrMortgageRadio.com.